time to welcome in Jeff Rosenkranz, Portfolio Manager of Shelton Tactical Credit Fund. Jeff, good morning. Thanks so much for joining us.
My pleasure. Good morning. Thanks for the opportunity.
So first, want to get a sense of your take on the inflation picture right now. Did the latest CPI report change your view in terms of where this economy is headed and what the Fed's actually going to do next week?
Well, it's a great question. I think it doesn't change the ultimate end game of where we're headed. It might have delayed gratification a little bit, but I think it's important to really understand that the Federal Reserve is working hard to tame inflation, but it takes time. A lot of the effects of tightening financial conditions, there's a significant lag that we know the labor market is really tight. The rail union agreement this week is a great example of significant wage pressure. Rents take time to start coming down. So we're going to get there. It's just going to take time. The market really wants to get out in front of this and anticipate a pause or a pivot lower. But it's just going to take time. But eventually we're going to get there.
I don't know if you can hear the cheering, Jeff, but there's a lot of action going on the floor here, not in response to the futures, in response to whoever's ringing the opening bell today. So bear with me as you can hear it. But just in terms of what that end game is really quickly, are you in the 75 or 100 basis point or rate hike camp for next week? And are you calling for a recession at this point?
I think 75 makes more sense next week. I think what the CPI numbers did was probably add a couple more 25 basis points to November, December. So precisely predicting exactly what those hikes are going to be, it's helpful, but it's not ultimately all that important. But yes, we do think a recession is coming. And it has to. We need the labor market to soften up. It's still really tight. As I mentioned, the rail union agreements, there'll be pilot union agreements coming in the not too distant future that really evidence how tight this labor market is. And to get wage pressures to cool off, we need unemployment to go well into the fours. And really, it's unavoidable without a recession. So unfortunately, I do think that's where we're headed.
Okay, so on that note, we'll talk about your fund in just a second. But for so long, when I talked to guests and said, are stocks the best place to be? The answer was always yes. And now I'm hearing more no's because of the macro environment. So you're calling for a recession. Sounds almost inevitable at this point for you. So what is your take in terms of asset allocation?
We think bonds are pretty compelling looking forward. We think returns over the next 6 to 12 months are going to be very attractive. Certainly, it's been a challenging time in fixed income and in all asset classes, and equities and bonds and commodities all play a role in a well-constructed portfolio. But high-quality fixed income right now, we have attractive yields that we haven't seen in a long time. And so 5.5% on triple B corporate bonds, almost 7% on double Bs, almost 9% on single Bs. And then in the municipal bond asset class, 3.5% on investment grade municipal bonds. And if you look at that on a tax adjusted basis, you're well north of 5%. So these are really compelling yields to step into. And then on top of those yields, if you do your homework and you make sure that you are buying bonds of companies that you're assured of getting repaid, on top of those yields, if we do get a recession and at some point next year rates start heading lower, even if credit spreads widen, the move lower in interest rates will drive capital appreciation, and that's how you can see yourself back, north of 10% total returns, again, on high quality fixed income. So we think it's a really interesting time to be stepping into bonds.
All right, so perfect segue into the Shelton Tactical Credit Fund. DEBIX is the ticker and employs a credit long short strategy. So walk us through this fund.
Sure. So it's a tactical credit fund, and what that allows us to do is make rapid and dynamic changes to the portfolio based on all this incoming data that seems to change by the day. And so we can make rapid and meaningful changes to the portfolio in terms of our interest rate sensitivity or duration. We can change up the credit quality of the portfolio, move it higher or lower in terms of credit worthiness. We can adjust our net long and short exposure depending on our outlook. And then we can also move between corporate bonds and municipal bonds based on our views of relative value. And then overlaid on top of that, we employ interest rate hedges so that it protects the portfolio from significant moves higher in rates. And so when you put all of that together, it produces a really compelling, uncorrelated return profile using fixed income asset classes. So it's a pretty unique strategy, and we think it makes a lot of sense in the current macro environment as a place to step into fixed income in a methodical and disciplined way.
And down about 9% year to date, so certainly outperforming the broader market. But you mentioned that investors need to do their homework in terms of talking about quality of bonds. But just in terms of other advice for investors as they approach the fixed income market, how would you advise them?
Well, I think look for managers who really do fundamental credit research. We're entering into a recession. Funds that just benchmark to an index, there will be some adverse credit surprises, companies that you wouldn't necessarily expect to deteriorate rapidly in credit worthiness. So don't just sort of follow the benchmark. Don't just step into long-only passive fixed income. We think active management right now in fixed income is really important. And also, look for funds that can make meaningful and dynamic changes to the portfolios to respond to all this change. So it's a good time, but you've got to step in carefully and choose wisely.
All right, appreciate that advice and for you breaking down the fund for us. Jeff Rosenkranz, Portfolio Manager, Shelton Tactical Credit Fund. Thank you so much.
Thank you very much. Appreciate it.
Have a great weekend.